Hi, welcome to the Market Alert for Wednesday, the 1st of June 2022. So stocks sink as illiquidity squeeze stalls. Last week's rally did not appear to be supported by material call buying. Well, we'll wait and see. Prices recovering yesterday from a bit of a sell-off. We'll see what happens today. Futures slide, yield jump and oil surges as inflation fears return ahead of Biden-Powell meeting, which didn't go very well apparently. Stock and bonds hit into month end while oil whipsaws on EU's Russian oil ban, and European inflation soars to record high and pressures ECB, who still say that they're not going to increase rates from 0 to 0.25 when inflation is running at 8% until the end of the year. Crazy, isn't it? Simple maths, but there you go. So on the economic news front, today, Lagarde speaking at midday. We've got a couple of economic news items at 3 p.m, ISM and the JOLTS job openings, and then Bullard is going to be speaking from the Fed at 6 p.m. In the gold-silver ratio, moving back to the upside, you'll see why when we look at the silver chart and the gold chart as well. But first, let's have a look at the stock markets from yesterday. And we saw the Dow moving slightly lower yesterday, testing the 5-bar moving average before recovering mid-afternoon. Looked like plunge protection team assisted move back to the upside. Market struggling at this 78% retracement. One thing that I would do, but I'll probably do it in the 30-minute chart, but I'll just show you in this one, just widen this out. And that is from this high down to this low, just to see how the market copes at the 89 ties in with this 78% retracement. This area here will be very important for the market should it manage to rally back. Very important area because you've got this move pulling back, failing here, and then moving to the downside. Alternatively, you can break to the upside. And at the moment, if the market holds above the 5-bar moving average, that's exactly what is likely to happen. So we'll get this move up. If it fails at this level, then it will break through and move higher. Otherwise, it will break to the downside. But we'll be able to see that as the morning unfolds. But certainly a bit of weakness around yesterday. As you can see, the market dropping off 300 points on the open for the Dow in the afternoon, but this was soon brought back, as you can see, and moved strongly to the upside. The market then became overbought with divergence, supply and a crossover, and then retraced 100% of this move, but 62% of this move, and then moved higher. But again, you can see we've been overbought. We've got an 89% retracement, supply crossover, and we're working our way down towards the DP in the pre-market session at the moment, but we are oversold there. So watch prices at the DP level on the overnight market for the Dow. Meanwhile, in the German DAX, we can see prices also moving sharply lower yesterday, coming off that 78% retracement. And at the moment, prices also were struggling with the 5-bar moving average there. So let's have a look at this in the 30-minute chart. Again, you can see that we moved to the downside yesterday in the main market. We had a couple of rallies back up, but then the market, once it got going on the downside, remained there and moved down with the Dow until obviously we saw the support coming in with an 89% retracement there, and then moving back up for a 62% retracement back up. Overbought at the moment, and we've just had a rally up to 89% and now making its way down here as well. We're already through the DP on the German DAX. Let's look at it in a bit more detail for yesterday. We can see that the futures market moving slightly lower. Then we had a bounce to the 20-bar moving average. The market failed to hold here, but the momentum was starting to switch as shown by the divergence. We then had a retest before we moved back up to the 200 MA, the close and the DP with crossover in stochastics, and then we switched to red, overbought, and we had divergence. So all the criteria there. We had a pullback and then the market trading down, and again you can see the supply coming in, oversold with divergence and the crossover, and we move back up, as you can see here. Now this is interesting because we had the momentum moving up here, then it broke out, and you can see the fact that we've got higher prices here, the market didn't really follow through. So when we got to lunchtime, the market put in a switch and then traded all the way down until the Dow opened at 230, where you can see, as we saw in the Dow, the market retesting, just sitting there with the momentum switching, and then they managed to bring the market back, as can be seen here. But we did have at 4:30, I think it's around 4:30, isn't it? So yeah, 16:35 when the German market closed, the cash market. So you can see we had a bit of a retest there, big spike down, and then off we went to the upside. So yeah, let's just have a look at where we are at the moment in the 5-minute chart. Just had a bit of selling coming into the market, stuck at that 200 MA at the moment. So just step back into the 30. Yeah, you can see why, because we've got a bit of support here, haven't we, to the left. We'll see what happens when the futures market opens in about 40 minutes. Let's have a look at the yen. So JPY breaking out yesterday. You can see this at the 78% retracement at the moment, just squeezing through there. Needs to get back to the 89 if it is to move higher. And in the 30-minute chart yesterday, you can see that we sold off in the pre-market. We sat on the DP. You see the momentum starting to switch. We get a retracement there of 78.89, and then the market moving up just over 100 points there, resting throughout lunch, and then the last move to the upside, as indicated here. The market sideways, but the momentum coming back, holding its own at the 20-bar moving average, and then moving to the upside there. The pound yesterday down for this as the dollar started to move to the upside, starting to look a bit weakish again. We'll have a look at the dollar in just a moment, but these are the downside targets for the pound. If the market does start to break down, it's going to take out this low for yesterday first, and then the downside targets between the 38 and 50 also sees the 20-bar moving average in this area. 30-minute chart was doing absolutely nothing yesterday morning, stuck in a range, then it broke to the downside, became over, sold, crossover, demand, and then the market bouncing back there. But overnight, you can see that we've come back. We had a bounce from being oversold with demand, crossover, and then we've become overbought with divergence, and in here we've switched to red, and the market's been making its way back. Watch the low for yesterday for the pound if you trade the pound. It's a very important area that will need to be held. And finally, let's have a look at the metals and the US dollar. So in silver, as I said yesterday, 21.50 was going to be the target. Where did the market go to? 21.50. Expect this to be monkey hammered down. Despite the fact yesterday I was starting to think that maybe it had a chance, but no, as soon as it retraced 89%, the market then, once got to the 200 MA, reversed and then sold off again, and now we've already taken out yesterday's low. Like I say, I'm still expecting this to go down to $20, and I can't see any reason why it shouldn't at the moment. It's still being manipulated to the downside. You only have to look at the US dollar. It's starting to find a bit of support. When you see this move down here, like I said, it should have rallied to the upside very strongly, and it wasn't allowed to. So the fact that the US dollar now is starting to make its way back to the upside, then we get back up into these sorts of levels. If we get back up to 104, then there'll be no problem in sending this market below $20 on the downside there, that's for sure, because it just didn't move and take advantage, or wasn't allowed to take advantage of the move to the upside. So technically, yeah, we're going lower. That's certainly what's showing there. And gold also came in for a hammering yesterday as well, taking out the 200 MA, despite the fact that Europe has seen its inflation increase to 8%. We know that's BS. We know it's a lot higher. But they're not letting gold and silver move until the end game really starts to take hold. So probably during the autumn, the earliest for me. So there we go. That's the metals. I haven't got crude oil at the moment because they haven't got the release. The July contract, the June contract's expired, but that was moved down a bit yesterday, but still in the highs. Okay, that's it for this one. Let's see what happens today. We're going into, of course, 2 bank holiday days for the UK as well from tomorrow, so it'll be fairly quiet in the UK. But that doesn't mean to say that the markets aren't going to move, because the US will be moving those prices, and no doubt will take advantage of the fact that there'll be one country and exchange out of the way for the next 2 days, so they'll be able to use that to bring the market back to the upside if they so wish. Okay, that's it. As ever, thanks for watching. See you in the next one.